What's going on, everyone? My name is Hamid Trades. I am the greatest trader in history. My goal in life is to make everyone around me rich. I have a free Discord server where people are already making a lot of money, hundreds and thousands of dollars. I share all of my trades, thoughts, commentary live, completely for free. The more good-hearted people in the world with money, in my opinion, the better the world will be. I don't believe in charging any money for any of this stuff. I'd rather everyone in the world learn how to do all of this stuff, fend for themselves. And essentially, I don't believe anyone in the world should have to worry about where their next paycheck is going to come from, where their, I don't believe anyone should have to worry about money, all right? And that is my goal in life. I want everyone to live a very, very comfortable, beautiful, amazing, stress-free life financially, at least, because I'm doing that and I want everyone else to feel that as well. So if you guys want access to the Discord server, the link is going to be in the bio. It's going to be in the description, the comment section. Go ahead and join if you want. I don't have any customers. As you can see, I just have family. So if you guys want to join the community of like-minded, hardworking individuals, go right ahead. And yeah, we'd love to have you in the community. So let's get started with the video. Currently, the SPY, technically, as we can see in the past few days, the SPY has came and retested this trend line absolutely perfectly, right? But we failed to cross back above basically the 450 level, the 451 level area 2 days in a row. And that is not the best sign. So basically what's happening is on a daily time frame, in the short term right now, the SPY is in a falling wedge pattern. So falling wedge patterns are extremely, extremely bullish patterns. When you even look at falling wedge patterns essentially on a 1 minute chart, intraday, they have a very, very high success rate. So falling wedge patterns are extremely bullish patterns. This means that the market should be bouncing, all right? But what usually happens when the market is giving such a nice, solid, like, look how clean 1, 2, 3 touch from the bottom, 2 touch from the top, came back and retested today. When the market gives setups like this, what ends up usually happening is we can continue falling and fall back down to essentially below 443 would make everyone very bearish, right? And then they could even come back and retest it back down to this lower trend line of the falling wedge, and then from here rip it. So at the moment, the market is obviously, like, in the past few days, really, the market hasn't really done anything in terms of close prices, right? Everything has been somewhat around the same price. So intraday, that's when a lot of the moves are happening. So we need to just trade with the momentum. We need to trade with, you know, the levels in mind. There are certain levels intraday that act as key levels of support and resistance. I talk about that in the Discord server, and it's almost impossible while the market is very choppy like this to give a definitive answer of, okay, like I could just waste everyone's time and say, oh, look, you know, if the market goes here, it's going to go here, and then it's going to go here, and then if it's a blah, 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 blah. But what I want people to understand is, in the grand scheme of things, until the SPY can reclaim this trend line, and this trend line for tomorrow is going to be approximately 451. If the SPY does not close above 451 tomorrow, we're still technically in a bearish setup here. There's no reason to become overly excessively bullish for weeks ahead. Okay, that's the thing. Intraday, you could be bullish as much as you want, where we play calls and puts. But until we cross back above 451, I would not be buying into any calls for, you know, a month out or a few weeks out for any sort of, you know, swing positions. That is number one. Okay. So number two is, if we break down below Friday's low here at 445.94, that would essentially bring us, I feel, back down to essentially like 444. And that would really, really be pretty bearish for the day, because at the moment, the indicators, you can see the SPY is very, very oversold. You can see the RSI is also very oversold. But we technically held the 20 exponential moving average for 3 days in a row. So we need to see, basically, if this breaks the 20 and then we break down below Friday's low, that can give a lot more room to the downside for 440, 450 at least. So just keep that in mind for a quick scalp intraday on Monday. But again, the main thing that you have to realize is until we cross back above this, it's not bullish. And also we have to look at the other sectors to see basically what is causing the SPY to be this choppy. All right, so let's go ahead and take a look at the IWM. All right, so as we can see, the SPY was much stronger than the IWM. So the IWM is obviously much weaker here. You can see that it's super, super weak. Plainly, the RSI is falling very, very slightly, which means that there's a lot more room to the downside. It's not the most bullish setup, but the MACD is extremely oversold. So if we break down below 196.68, that can cause us to fall down easily to 195.50. And basically, if the SPY does not reclaim 451 and the IWM continues to show more weakness than the SPY, then the IWM can easily break down below this level as well. But it's a good sign that we are getting... So look, let's take a deep breath. In the short term, objectively, it's a good sign that we're getting close to the lower level of the Bollinger Band here on the IWM. All right. So technically, there isn't going to be a lot more room to the downside on the IWM. So just keep that in mind. All right. Technically, good sign. All right. That's basically really it. I mean, aside from that, everything looks really, really bearish. But once again, if we break down below this low here, we can come back and retest 195.50. But then from there, there is not much room to the downside until, you know, of course, if we start really, really breaking down below, that would be amazing. But we can see the Bollinger Band, the lower level of the Bollinger Band is very close with the indicators, the MACD specifically, very, very overextended to the downside. So we could see a bounce soon this week, in my opinion. So this is a chart of the coming week. Tuesday morning, we have CPI data. We have a Fed member speaking at 12. Wednesday, we have PPI data in the morning. Thursday, we have core retail sales in the morning and unemployment claims. And then Friday, it's a dud. So essentially, you know, we could end up bouncing soon. Another reason why I feel like we can maybe bounce this week, a lot of it really all depends on the earnings for the large banks, essentially. This is going to be a very, very big, important week for the financial sector. Wednesday, we have earnings for JP Morgan, BlackRock. Thursday, we have for Wells Fargo, Goldman, Citi, Morgan Stanley. So basically how these stocks do, it's going to cause the rest of the financial sector to United Health Group. This is a really, really important week for basically financial sector. And, you know, it's beginning to be a very, very fun time soon in the market. We're about to have it's beginning to be earnings season. So once again, that's another reason why I don't feel like the IWM can start to really, really tumble. These stocks should have good guidance, maybe, you know, because with the climate, but I mean, I could be completely wrong. But essentially, the technicals are showing that the market is nearing a bottom on the IWM. But again, I don't play earnings, and we trade things one day at a time. So yeah, there's that for the IWM. Let's go ahead and take a look at the large tech stocks and the NASDAQ. So basically, interest rates are going higher, which is better for the financial sector, which is better for banks, right? But interest rates going higher is not good for the tech sector. And that's why we see a lot of these large tech stocks have been making new lows on Friday. Literally across the board. Maybe Tesla was the only one that held support. Tesla and Microsoft are the only ones that hold support, I think. So Apple, we saw that it made a new low. Amazon made a new low. Microsoft held, right? Tesla held, and Google made a new low as well. So we can see across the board the large tech stocks are taking a hit. Let's take a look at Facebook. Yeah, it's not really doing much, but essentially this is not the best sign. So that's why we can see that all throughout basically at the end of last week, the NASDAQ was taking the heaviest hit in terms of moves to the downside. That's why we were taking QQQ puts a lot, because they were very, very volatile. They were paying off way faster. So we can see, compared to the SPY and the IWM, the NASDAQ is clearly the weakest link at the moment. All right. And essentially, if we break down below today's lows, 347.38 is going to be it's going to be the main level. Sorry, it's going to be a very, very important level of resistance or support moving forward. If this breaks, then it is very, very likely that we can go and retest this trend line here. And on Monday, this trend line is approximately going to be at 342.75. So if we can come back and retest 342.75, maybe this week, potentially, that would be pretty solid. That would be a really, really amazing move to the downside. We would make a lot of money right now. And that would basically cause the SPY to break below, obviously, 443. And the fact that the SPY is not breaking above that trend line, the fact that the NASDAQ is showing this weakness, the fact that Apple is leading the weakness, and the fact that rates are rising, which is good for banks, which is not good for the tech sector. You have to understand that banks make money when rates are higher, but technology stocks, technology companies, they take loans out, because many of them, they don't use their own cash. So they take loans out and they have to pay more money on the loans because the interest rates are higher. So they're actually losing money. The stock is falling because of that. So when rates are low, people take loans left and right because they don't have to pay anything. Like, you understand? So they save a lot more money. Now that rates are going higher, now that the Fed is basically saying that for the next few months and within this year and the next year, the rates are they're going to have at least 5 or 6 rate hikes. That's why the tech sector is taking a hit. That's another reason why I'm saying to hold off on trying to go long stocks at the moment until there are clear defined breaks of levels to the upside. Okay. Now is not the time to try to buy into extreme weakness. I would rather buy into strength. Okay. Because clearly at the moment, right now, the SPY is bearish until it breaks above 450 to 451, until we close above that level multiple times. We need at least 2 closes above that level for me to definitively say that we're going to continue going upwards. So as we can see, the NASDAQ is the weakest link here. The RSI is the weakest compared to the SPY and the IWM as well. We can see that the other 2 indices are showing weakness as well. But now let's go ahead and take a look at Bitcoin to see if, have it as a cherry on top. All right, so this is basically the best sign for the market. So we can see Ethereum bottomed out here and is breaking above the 20 exponential moving average and is showing clear support and strength to the upside. Solana, same thing. Bitcoin beautifully held 42,000 right here, and we can see that this bottomed out perfectly and is now continuing to the upside as well. It's following Ethereum's lead in strength. And essentially, this is a really, really good sign for the equities market as well. If Bitcoin can continue and break back above 44,000, that can be really, really bullish for the equities market heading into this week. Essentially, let's go ahead and take a look at this trend line here. The main trend line that we need to break back above is going to be this blue trend line. And approximately it's going to be like the upper 45,000s this week. That is not that far away. We can really break back above this level. And if that happens, if we break back above this level, once again, this will show extreme strength and the equity prices should bounce. So keep that in mind. It is a very, very good sign that Bitcoin is holding this level of support. And when Bitcoin shows strength, it shows strength into the market right now, crypto and the market, the past few months and weeks, we've been tracking that Bitcoin rallies. It shows that strength after a while in the stock market, and then they take turns pumping. So just keep that in mind. It's a very, very good sign that Bitcoin did not end up breaking down below. And it's also, you can clearly see it's a very good sign here that the lower Bollinger Band on Bitcoin is also much closer here, very similar to the IWM. So it's very unlikely that we're going to really start breaking down below 40,000 here, because the lower standard deviation is skyrocketing upwards and it's getting closer. So I hope you guys enjoyed today's video. I hope you guys have an amazing weekend, and I will see you guys tomorrow. Thank you.